Hi, everybody.
Hi. We're gonna have a 1 second interaction. I don't think it's on there. It's on the charger.
Yep. Sorry,
Found
guys.
it.
We need this to work. Anyway, like every other snafu with live, we have to always be.
There's always something.
It's always something, right? We'll be a day without something. And it's good that nobody got bothered. Anyway. I wonder if my mic is working.
Yeah. Cool.
Could you hear me, guys? Could you hear me now? Anyway, there's nobody watching.
Anybody?
Anybody? Anyway, it's fun to do the stats, isn't it, Carrie?
Yeah.
I can tell you your level of excitement's like hitting through the ceiling here.
Oh, yeah. Can't wait.
But anyway, I'm being facetious. Okay, let's start, guys. Let's start before this falls apart. Before we even begin. Anyway, how's everybody doing today? Anybody out there say hello, wave, send a hi, and if you have a question, you can refer to the comment section, which I don't even think Gab was even set up for, but
I'm looking at it though.
oh, you're looking at it. All right, good. So anyway, let's see what we got going on, Kerry. You can begin the New Jersey Monmouth and Ocean real estate stats.
Yes, for November.
What do we have in November?
The average days on the market are up year over year 16%, and also up month over month almost 6%.
Yeah. So one of the things we're starting to see is it's taking longer to sell a house precipitously. 16% year over year. So it's taking a little. Now we always talk like in a small, like kind of segment. Like a small sample size, but because where volume is currently is not very high, but it appears that things are taking a little bit longer. 16% is a noticeable difference. The biggest difference was also to the month over month, right, which is almost 6%.
Yeah.
So it really showed that in the last month things have in some ways high. Oh, it's that Gabriella. That's Gabriella. She's on. I didn't know you're on TikTok. You finally got TikTok.
You said to look at the comments. So
Yes. Oh, good. So.
I decided to comment.
But so anyway, 6% up on the month over month.
Yes.
That's a pretty noticeable slowdown.
It is.
Compared to what we've seen over the last year. I mean, some of this seasonal, but the 16% year over year difference is really the stark contrast, I think, in this report. So it's one of the things to keep note of. We'll see how that plays out. Because before we continue, I did come up, there was a report on the mortgage interest rates have dampened the enthusiasm for people to take out mortgages. There's a press release today from the government. The CFPB did a survey and said that for the first time in years, for 2023 loan originations are down 1/3. So meaning that the slowdown in the volume of sales is really starting to become a little bit more profound. Loan applications for both home purchase and refinance activity dropped significantly in 2023. Applications decreased by 4%. That these rate increases over the last few months, and like after the Fed dropped the rates, we talked about it last time. The rates actually came up. So that's really at stake here. So, but loan applications are down at nearly 30%, which is indicative. So you gave the report. Why I'm bringing this up is you gave the report that the average days on the market fell
Yeah.
to 16. It was up 16, about 16 and 1/3%. And the month over month has seen a jump of almost 6%. So the days on the market has been steadily increasing over the course of the year. So this is interesting going into the spring season because the spring season is heating up. I don't know. Everybody's kind of expecting like a bounce here. Like there's some speculation that, and it's speculative because we just don't know for sure, obviously. That's why we speculate. That the new year is going to bring in a lot more home buyers than last year. That is something that we have to watch. The Fed's going, there's about a 80% chance that Fed lowers the rate tomorrow. There's a FOMC meeting tomorrow. The Fed is scheduled to drop a 1/4 point. That's the Fed rate. What's happened in the past big rate cut was that actually mortgage interest rates went up. This is based on the 10-year Treasury. So that's another something to be cautious about. Like what happens after this rate cut. The 10-year Treasuries have not really decreased, which is not really decreased. People say, "Oh, well, how come the mortgage rates didn't go down with the change of the Fed fund rate?" Mm-hmm. And I think that's because of just some uncertainty about inflation moving forward. But anyway, next thing.
Next is the month's inventory. Mm-hmm. So month's inventory has decreased about 0.80% year over year and has changed the same, has stayed the same month over month.
Right.
At 2.54%.
Well, the interesting thing is that corresponds with. So while there was a jump in active listings and there's a jump in closed sales, mm-hmm. So year over year. So corresponding with that month's inventory number, it's basically it's stable. It hasn't moved, which is meaning that there's a fair amount of. So this is how long it would take for all the inventory to sell off if new inventory was to come on. It seems to be stable at the current moment, even with the rising new listings. But what it is creating a little bit of competition, so houses will stay on the market just a bit longer.
The sale to list price has decreased 0.60% year over year and decreased month over month 0.70%. Sale to list price.
This is the first time it's actually come under 100 in a while.
I know.
We haven't really seen this number. There is more negotiation room, if you say that. It's 99.8% of the houses that do sell. We're seeing a lot of people who are significantly overpricing properties right now. This is something that should be a little bit of a telltale that people have come down. It's under 100%. And I think that's the first time since I think February of last year that it came down this low. So when we talk about under 100%, people are basically getting list price offers on houses that did sell. That corresponds with the fact that, and this is why this number is kind of skewed, is that you get one house or two houses that list lower than probably what the market expectation is. This is a tactic that I don't particularly care for, which is real estate people will say, let's create a bidding war by keeping the price lower than where market would be, and then it would create a big bidding war where it would move up. I've heard this being deployed as a reason. I don't think that that's necessary to do, and it kind of skews this number up a bit. So, and then you have people who substantially overprice the house and then don't get any activity and it forced to cut down further. This year, it's going the other way. The sales to list price ratio has started to come back. Now, some of that could be due to seasonality. Some of it, sometimes prices come down just a smidgen. So that could be the issue there. But it's the first time it's under there. But I think like February last year was down there. It was down under 100% from the sale to list price ratio. But anyway. We'll see what the coming year has for us.
Mm-hmm. And now the sold median listings. So the sold median listings are up 10% year over year and are up almost 1% month over month.
And the sold average listing?
Sold average Sold median listing.
Sold median listing.
Yeah.
Yeah. So it came up to almost 10% year over year.
Yep.
So people are bidding on higher priced houses are selling. This has been a phenomenon in the market at the higher end of the spectrum of real estate in New Jersey specifically. We've seen people like buying more expensive houses, and this is in large part to do with the sale to list price, the sold median listing price. So the high-end market is doing substantially well in Jersey, which can tend to skew the data a bit. 10% is quite notable on the sold median, so that means the houses that people are actually looking for are actually at a high. They're in the higher price range areas, and it's bringing the number up on the sold median listing price. So of the listing prices that are sold, people are looking higher. Some of that data is that there's a pretty robust luxury market in New Jersey, and that has a lot to do with this. But let's see what happens. Let's see what the year brings, because there's one that I noticed is the pending average listing was down, and this is corresponding to rates. I'll get into that in a second.
Yes. So the pending average listing is up year over year. 10.70%, but down month over month 2.6%.
Yeah, just a little over. It's a little over 2%. So the pending average listing is these are pendings, and where the average listing was when the house went pending. So it's one of those things that we like to use as a leading indicator to see where the market's going, maybe moving forward. So we want to look at this and say, whether the market's moving forward, or if there's going to be some kind of retracement on price here. The interesting thing here is that the month-over-month numbers, the pending average listing is down 2%, even though it was up 10% on the year. This is reflective of the higher mortgage interest rates in the last several months. So after September, the mortgage rates went up, and it corresponds to what we're seeing here in the month number and on the pending average listing price. It's people when the rates come up, people look for a lesser priced house. Sometimes it's like, okay, let's get them all on the table. Let's get this out of the way. We just got another one.
Wow.
But hopefully we can get this thing sold this week.
Oh yeah, you for sure will.
Okay, you're gonna have to rub your head for some good luck. What do you call those dolls that you rub their heads for good luck? For the long hair. You ever see them?
No.
I was thinking of voodoo dolls.
No.
Or like a magic ball?
No, I'm dating myself. They were back in the day. There was these things that they had the long hair that you kind of you rub their head. It gave you good luck.
I don't know it.
I'll have to pull it up.
Yeah.
I'm showing my age. Anyway.
So the next thing is the sold average listings. Sold average listings are up almost 7% year over year and up 0.70% month over month. Sold average.
I don't like using this data too much. So. Nothing. It's not notable based on the pending average sale. So pending sold still seem to be creeping upward. The month over month difference on the sold average listing is 1.71. These numbers are kind of a little disjointed. It's taking too much. When we do median listing versus average, averages tend to get skewed because we have low sample size. So meaning there's not that many houses that are being sold, and you kind of get the data skewed. So you don't get you get these bumps. So median's much better to use to kind of project where we're going here. So it's much of a nothing burger there. It's not notable as compared to the pending. So what's we got next?
Is the new average listing. New average listing is up 4% year over year and up month over month 6%.
We're going in the opposite direction here, guys. this is where we're like noticing that the market's like in two different directions. That people, while the sale to list price ratio has dropped, people are precipitously pricing things higher. And I think that's something we'll watch going into the new year. Because what the data is saying here is that because the sales to list price ratio is coming in lower month over month and year over year, for the first time in a while, the sale to list price ratio has really dropped under for Monmouth County and Ocean. Again, some markets are much higher than others in New Jersey, and it's very hard to give you a deciding, there's some very, very hot locations that still remain hot. So the data is big, it's a big sample size for the area itself, and markets tend to do better than others in both Monmouth and Ocean. So, but it seems that people are putting their house up, especially on the month over month. That's a pretty drastic number that they're up over 6%. It's not reflecting in the average sale to list price ratio. So we're going, and this is, I call it divergence, right? Which is the separation between these two. What happens is that market expectations rise. Sometimes when things are coming down a little bit, there's a divergence between when people take action on the sale and what they'll accept while the market is still maybe creeping down a little bit lower. And that's what the data says here. So the data says that we're basically, with this divergence, this separation between the expectation of the market versus what's actually happening. It's starting to separate, at least in this report. I don't know, moving forward, these things tend to change. So it's like we have to think about it in that perspective. How does that change? Is something moving forward we'll look at. But it definitely, just to clear that up, it definitely means that the market's idea where houses are selling versus what's the reality is separating to the upside. So meaning people's expectation of what their sales price is going to be versus what's actually happening at the sales level, two different places.
Right.
There's a divergence. So anyway. Yeah.
And that leads us to the sold medium sale. So the sold medium sale is up year over year 9% and also up 0.77 month over month.
Yeah, the sold median sale price continues its ascent. I mean, it's definitely slower than it has been. And this is going to be an interesting number moving into sold data, like sales price, like the appreciation rate. Because we go over year sample is 9%, a lot of this happens in 1 or 2 month spans and then could retreat very quickly. So first time I've seen it in these markets where based on where the data is, at the moment, could skew these numbers quite a bit. So as these interest rates have moved up, we do see the correlation between prices start to come down a bit. And these rates they're traditionally higher than they've been over the last year. So we're at the higher end of the rates that we've had. I mean, it's definitely not the 8 we had at the beginning of last year, which it had an impact on the market. So is that going to stabilize? Where does that go? I think we have to wait to see how the Fed rate cut comes in. Obviously, there's some expectation that when the new president takes office that there'll be more enthusiasm. We'd like to see that. But I think we should be muted in terms of this. Obviously, everybody sees the price of Bitcoin. So there is a sense of exuberance out there right now. The markets have been absolutely flying. It's the idea of cheap money, again, is in play. That's the only reason for it. And Bitcoin is a good harbinger of what I say of consumer expectation. So we've done some correlations between the price of Bitcoin and house prices. Bitcoin has been kind of an indicator as to where the market is going. So I want you to just keep that in mind. One of the things we found is the correlation between the price of Bitcoin and the price of housing. And we've obviously, and there is cause there's cause and effect with this, and I know people may think they're different. Every market moves in the same direction. I don't care what it is. So if the stock market's doing well, usually real estate's doing well, and Bitcoin has a very consumer level focus. So I do expect, and I can tell you in the last week, activity has seemingly picked up. We've definitely seen a lot of people who are on the fence now starting to come off the fence and getting back into the market again. There's a sense of exuberance out there. I'm not telling you whether that exuberance is actually warranted yet. There's no other fundamental changes of the economy, and if exuberance could kind of bounce out of this, and I'm going to say we were in a 2-year recession. They can lie about it if they like. We were in a recession. It's not a recession. We were in a stagflation recession, which is prices did not come down, but activity did not come up. Like we had a decrease in productivity and like jobs and job losses and things like that. The prices didn't reflect that because of the fact that we had a little bit of a stagflation environment. That's what stagflation is. That's one of the things that people are scared of. And there's some things out there that are still lingering that we have to really pay attention to, because the last two inflation reports have said that inflation has creeped up in the last 2 months. There's a good chance that the Fed may be a surprise tomorrow that. And I think the markets may react very suddenly if the Fed said they're not cutting the rate. And that's a possibility. I think at this point, the Fed may decide, based on the last 2 reports, that, let's pause another month. Let's see how things pan out with inflation. So tomorrow markets may react kind of funny, especially Bitcoin. I think that's where you probably see it first. As soon as that announcement comes, if they don't do it, you're going to see a pretty big drop in prices there, because there's been an over sense. It's a little frothy. Maybe not so. It's wild. It's just, but you have to look at that as what we call a leading indicator. It moves while you look, and I'm going to tell you one of the things that we found with Bitcoin and like the liquidity pool, because of the fact that it's traded a lot quicker than real estate, and that's why real estate moves slower, the velocity at which these things move slower. There's closings, you have to do paperwork. So things like with real estate do not correlate immediately to what's going on. With highly liquid things, which Bitcoin is right now, it's one of the more liquid things. And because of its kind of gold-like principle, call it for what it is. You think it's a scam, not a scam. It's not a scam. It's what it is. It's people believing in it now, and that's the way it goes. That's how everything, you believe in something, it goes up in value, because I always say beliefs have a value. It's whether it's a piece of paper or whether it's a Bitcoin that's in your wallet on your phone. That's how it works. But what it does tell me is that either inflation could be picking up again, because that was one of the harbingers before inflation took off, Bitcoin took off. So that was preceding that. So because of it has a good sense of market sentiment before the market sentiment sets in. So, and I'll give you an example of that. In 2021, Bitcoin fell from like 70. It picked up, Bitcoin went right up, then went right down. Inflation picked up and then came down. So did the whole entire market came down. So everybody who knows stock market knows that they include. And I can tell you right now, this is whether you think housing is not in a recession or not. The only reason why housing kind of did not fall like stocks did is because of the illiquid nature of housing. It's not a liquid in terms of it's easily sold and transported back and forth. It was quick. If it was like, if you could day trade a house, we would have had the house price would have came down. But because of the slow nature, it kind of beat out the market and kind of was a stabilizer. It just doesn't move as quickly. But we look at highly liquid markets, like a thing like Bitcoin, because it's a more sentiment-fueled asset class. It's a good harbinger of what may be happening looking forward. And it's proven itself. I've kind of watched this and studied this over the last 3 cycles to see how these things are correlated. But house prices, right after Bitcoin rose, I'm telling you, it was like the wheels fall off the wagon when it came to finding houses. Does that happen again in 2025? The early indicators are something's happening, that things are starting to loosen up. Does that mean we should be jumping up for joy? I don't know yet. I think we're kind of pre. And I think there's a lot of factors that I can't say are happening, but it would be pointing to rise. There's an expectation in the rise of inflation. That's why you have Bitcoin was like the hedge against inflation, and that's been how it's worked. So that should be an indicator, and that may be something. And don't put it past the Fed to even look at that as an indicator whether they decide to cut rates or move rates in the opposite direction. Because I do believe this is what's going to happen. You're going to get probably a rate cut tomorrow, but I do believe that the rates will come. The Fed will increase rates coming into probably April. I think inflation's going to get hot again. They're going to raise rates again in April because inflation may be running hotter. The last 2 months say it is. I would caution, even though the markets would probably tail off if it actually came to fruition, that tomorrow they didn't cut rates was probably I would probably lean toward that if I know people that want it to go down. I get it. But if it goes up too quickly, you will have an inflationary cycle. And if you think things cost a lot now, just have loose policy and you'll find out exactly how difficult things could be. But we're in an interesting situation. I think the markets are going to be, this is an odd time, strange time. I don't know how it plays out, short term, long term. But I don't know. I tell you, I've seen things in the last few months that you confound the imagination, which scares me. Because everything I do is fundamentals. I have no, how do I say, I have no interest in what I look at the fundamentals and see if they make sense or not. And if they don't, you kind of you say, this just doesn't make sense. And you pull away from it and, you stay out of things that obviously could blow up in your face. Mm-hmm. So that's why I say about cryptocurrencies and things like that. It's a FOMO atmosphere. And it's once it gets going, it's like fever pitch. And the people that have money, unfortunately, will sell on the people who buy in now. Or maybe in a couple of weeks. Who knows? I don't know how long it'll last. But most of the people that trade in crypto trade in the hottest of markets, and that's why people who are retail, I call it retail FOMO. I think Gabrielle is one of those. She buys at the top of the market and then waits for the market to come back after 2 years. Is that how it goes?
Yeah.
It's how it always goes. And the bottom line is, we like these markets, but it's one of the craziest boom bust cycles. But that's the thing that scares me about it. I'm gonna be honest with you. If you said to me the trepidation behind cryptocurrency, even though it's an unregulated thing, it really goes through boom bust cycles in ways that, frankly, could be a little unnerving. I don't think that there's a lot of gambling involved with the whole idea of it. It's just gambling on ideas. I'm not saying that it's bad. I think Bitcoin has a pretty good use case for being a replacement of maybe a digital asset like a digital gold, where it can be easily transferred, and that has some really solid use case because your value of whatever you have currently is stored in one particular asset class, which over time grows. The other things, I'm not quite on that yet. There's some things, but you have to be. It's basically FOMO. Everybody buys in at a certain time. It's all charts, and they play charts with it. They know when the exuberance is high. And for most people that are in it, this is where I don't like most people that are in it. People like you, people like Gab, people like no, that you hear about it late. When you start hearing about the markets,
then
it's always too late. It's when you don't hear about them is when it's time to buy. And I always say this to people. It's like, I told you guys last year, right?
Yeah. No,
What did I say to you last year when it was down low? I said,
you thought I should.
it's time.
Yeah.
Time to push the button.
I know.
And today you'd be singing a whole different tune. We have a whole holiday party tomorrow. She'd be dancing like crazy if she saw what a portfolio looked like. She did what I told her to. But you would have been able to buy a Fendi bag or whatever the latest trend is in bags. and say, I only put in $150. But I'm up to 3,000. How does that happen? And then I would have been seen as a genius. I couldn't buy her into it. I would have been seen as a genius.
I know. I missed out. Next time, whoa. Just broke your pen.
Because, you should have did it when I told you.
I know.
Now I won't tell you to do it.
What?
To the top. No, now it's like, for DCA, maybe you put in like $20 a week.
Maybe.
That's how you do it. But, let's get to the last part of this, because we did pending, and then we got to do I sold total, right?
Yeah, so we have the active listings.
Yes.
Active listings are up 6%, almost 7% year over year, but down. I messed up the numbers, sorry.
Yes.
Active listings are up almost 9% year over year, but down 5.20% month over month.
Seasonal. That's a seasonal adjustment. Nothing to write about there, but it is, inventory is creeping up. It's starting to show in the month's inventory numbers. There is inventory in New Jersey is coming up. Sales to list price ratios are coming down. That's when you start, like I said, you'll start to get divergence, meaning the separation between sold to list price. These things, they'll separate at certain points and cross over. So the divergence is to a little bit to the downside here, because the inventory keeps creeping up. Mm-hmm. New listings are down 20% from a year ago, but they are up 6% from for the total year. Yeah. They're up. So new listings are continuously, even though 20% is a drop, that's a seasonal number. I'm looking at the year over year being 6% higher. Mm-hmm. That's reflected in the sales to list price ratio, and that's showing up. So it's important to note that as far as New Jersey is concerned.
And the new listings are up year over year, also 7%, but down 15% month over month.
The active listings, right?
The pending listings.
Oh, pending.
Yes.
All right, 15%. Yeah. Month over month, again, seasonal. Pending listings are up. That's because more inventory is there, so there's more buyers as the inventory keeps up. The question is when that starts crossing over. Could that cross over into prices? Could. There's some indications that, yes, there was not enough inventory, but there's also, I don't think there's a lot of buyers based on the CFPB report, which shows a 30% drop in mortgage applications. So there's not a big pool of buyers waiting. Unfortunately, what a lot of pundits have said is that, because there's no inventory, there's no sales. No, there's not much inventory because there's not much buyers. It's a very segmented market at this point. So you can't confuse the two. I don't want people confusing the idea that because pending listings have been up over the year, which is reflective obviously in the sold listings as well, which was up 9%, is because the rise in inventory has led some people who are maybe trapped out of the market to enter into the market. So it's come up a bit. The question is it go like this and then like this? That's the $64,000 question. It's like, is it go up? Yeah, I'm really dating myself. Anybody, I've said TikTok, I don't even know what the hell that means.
No.
So, oh, God. Pickle me already. I don't want to, but you see $64,000 question. That's like that's from a game show.
Oh, yes?
I think I learned it from my grandparents who used to watch it. I think it was, they used to love it. $1,000 question. Because it was like the question, does anybody know that question? The 64, Google that. What's the $64,000 question? We're going to get the answer.
I have heard that.
We have researchers in the room today. Gab is on the research file.
Oh, it's not giving. You want the actual question?
What does it say? It's a game show question.
Yeah, it's just saying that it's a.
Go ahead.
It's just saying it's a show.
Yeah. What show is it?
The $64,000 question.
That was the name of the show?
Yeah.
Oh, there it goes. Okay, so I'm dating myself. We used to watch.
I thought you wanted.
No.
Question.
No. No, there's a game show. wasn't sure. It was called the $64,000 question, right?
Oh,
Yeah.
wow.
There you go. See, you
Very
learn something
unique.
every day. Anybody remember that? But to be honest, that's actually before my time. That was like,
I was just
that was my
1955.
Yeah.
1958.
that was my grandparents' time, and I used to be over their house, and they used to watch reruns,
Wow.
and I just and they're like, and then it became a phrase like
No,
they used to use.
I know. I feel like my parents use that phrase sometimes. Like I definitely heard
Not
it
really
before.
dating myself.
I definitely
Not my
heard
parents.
it.
Heard it. Mom, Dad, did you hear that?
No.
Gab, you want to give us a $64,000 question?
I'm trying to find it because I'm curious.
It's a bunch of questions. The name of the show is 64. I think you got to answer a series of questions to get to the 64.
Yeah, the last one is
Yeah. And if that was inflation based, it's about $3.75 today. Back then it was probably $1 million, 64,000. You could probably buy 3 houses.
Yeah.
1955.
Yeah, not today.
With $64,000 doesn't buy you a billion. That's why you've seen the rise of Bitcoin, because the bottom has fallen out of fiat currency a little bit. And that's been even though the dollar's up on everything else, that's like saying, saying the 2'3" person is only slightly smaller than a 3'6" person. But the average is like, maybe 5'9". So it's like, it's a war. It's like, yes, you're very good against everything else, but everything else isn't so good either. And that's been the rise of this whole phenomenon of Bitcoin. That's why there's a hedge. I don't know. A lot of people are saying that this is like a point of transformation that we may see, like more countries. Obviously, the administration's talked about changing to a Bitcoin quote reserve, and if it starts like that, that's what will happen. You'll see a big. There's a lot of chatter. It's creating a lot of FOMO. I'm not a buyer, but for the rest of you folks that want to take a chance on it, be my guest. You better be a good short-term trader, because this is not the time. The markets are nuts, and when it gets like this, they count around. How was that?
I know. That was a
It was a
lot
really loud bang. It's the drones. Guys, do you hear drones?
Stop.
Very scared of
I'm
drones.
scared of them.
Has anybody else? Anyway, we did the sold listings, right? No.
No, the sold listings.
Let's just get to that so we clear this up.
Yeah, so the sold listings are up year over year, almost 10%, but down 5% month over month.
All seasonal. Sold listings up again because there's more inventory. It's creeped up. So there's a few buyers that were probably frozen out of the market, probably got in it and bought. So there's a little bit more inventory to choose from. So it's come up a bit. The question is, and I do think there are two things that I think this report's going to highlight, and it's going to be based on the fact that there's two very key caveats for the market to move forward coming into the new year. One, I've said it before, you look for liquid asset appreciation, depreciation. I look to like gold, I look to Bitcoin, I look to which are highly liquid markets. They will give you good leading indicators as to where the economics of things probably will look like in the next several months. I'm not saying it's going to be 100%, but these are things we like to look at. We want to hedge, right? We want to take what we know and kind of give it to you so you can be better prepared. I do think that based on the current signs, unless something happens overnight, if the Fed says they're not raising rates, tomorrow's not going to be a pretty day. Like if they say they're holding rates where they are, the market is so rate sensitive, it's insane. The markets are just rate sensitive to the max. I can't tell you that we've been doing this for a couple of years now, and every time the rates come up and down, the market will it'll flip flop like this. And it's turned over a couple of times to where like the houses can't get offers to like getting multiple offers within weeks, and just because of a rate change. It's one of those things. We're in a very, very strange environment. This is not fundamentally I don't like to see this, but it is what it is. You have to kind of deal with it. Our thing here is kind of advise people on like where things are going. And I think that's the case with the listing in Asbury Park, which was kind of like slow a little bit, and then all of a sudden it's like, right? She doesn't even know what I'm talking about. She's looking at me with blank stare. I just threw it in there just to see if she was, to see if she.
No, I'm nodding my head because
She's doing research on the
we just
$64,000.
got another one. And I was trying to find out what questions were asked on that show because
I
they
know,
were
all of a sudden,
11.
right? It's like, this is like, it went from like, in a week's time, it's like multiple people, right?
2 tomorrow.
Yeah. It's like, what's going on? And I see it. Yeah, I mean, we have another house. I mean, there's activity picking up. And guys, I'm going to tell you this. There's a correlation between the price of Bitcoin and the price of housing. It's happened every time. Every time, even in 2018. Same thing. Same thing. Low inventory in 2018. Prices shot up. Interest rates shot up. Everything went down in 2019. The prices came down, maybe a fractional. It's never really a lot, but maybe it's like fractional, maybe 2-3%, not noticeable to most people. But it's the same thing, high interest rate environment. And then it led to, and this is a correction period. We came out of a correction period. So if you're sitting on the fence and you think about selling, I think the time is probably best in the next few weeks are almost certainly will bring you better results than I think at any point last year. I do think that we're heading in that direction. Borrowing. Here's where the borrowing is. Tomorrow's interest rate decision by the Fed. If they don't raise it, I expect everything to come muted very quickly, including the price of Bitcoin, which is already accelerated. I think today it was like 108. There's all sorts of wild stuff going on. There's something wrong. There's something wrong. There is something wrong.
Yeah.
I don't know how an asset class goes. It's gotta be like, it's scary though. I don't like it. It's really, because it could lead to, you staring at the Christmas.
I keep banging into it.
We need to get rid of this thing when we do this.
I know.
You hung all the Christmas balls.
I did.
You used to do such a good job. This is like
I used to do such a good job.
I know, what happened to the garland?
Oh, I don't know.
Tom, you better talk to her about decorating. Is she going to be doing the Christmas tree? I'm only kidding. She's embarrassing her. Could you catch the redness on the screen? Anyway, but that's our report. If you have a question, please feel free to ask. What does it say? Oh, it's just an invitation. I hope you found it useful. What's your guys' take on Bitcoin and housing? You could throw that in the comment section.
Yeah.
If you're on Facebook or whatever else you're on. But I do think there's a correlation. Be prepared. Depending on what happens in the next few weeks, it may take like again, one go right, one indicator may pull back. But you're going to get I can tell you, things have picked up in the last week. And it's not a typical time for things to pick up, so I could have just imagined January will look like. January looks like a pretty good month if you're going to be selling. You should, you need to call us now. Let's call it, you need to call us now if you're going to be selling in the next month and a half. Because they're probably, maybe the last great time to do it, because I don't know what's going to happen.
Yeah.
But you're going to get exuberant. As soon as people realize, I hate to say this, it's like Bitcoin, right? Nobody knows about house price appreciation until they've already appreciated 15-20%. We're keeping you ahead of the curve. Stay ahead. You're going to get a bounce. There's no doubt about it. Prices are going to bounce back up moderately. Let's not get 30% kind of crazy, but it's gonna come up. And that's, Kerry's starting to be in pain.
And these chairs are so uncomfortable.
Yeah, I know. We have to get into the budget. Anyway, that's what we have, guys. We know what the $64,000 question is. We'll be giving you prize at the end. No, I'm kidding.
Yeah, right.
I even
Yeah,
asked
good.
ChatGPT.
Hey, what did it say? Nothing?
Nothing.
We gotta do some research.
I'm gonna have, she's gonna go ask her mom and dad tonight.
Yes.
This is a $64,000 question.
I am really.
Did you ever know that? She's heard it before. Anyway, that's what we have. Have a great night. We'll see you, I think Thursday. Oh no. We'll probably see you Friday during the day.
Yes. All right, guys. Good
Ciao.
night.
Have a
Bye.
great night.